The US dollar continues to plunge to a 14-year low, triggered and reinforced by US President Trump remarks that he is not concerned about the current weakness of the US dollar. And also yesterday's US Conference Board Consumer Confidence Data or Index for the month of January has fallen to a low that is not seen since 2014. Very interestingly, the dollar yen in today's Asia session managed to see some signs of stabilization after 3 consecutive days of decline, increasing the risk of a counter-trend rebound ahead of today's key risk event, which is the US Federal Reserve Monetary Policy meeting, and as well as Fed Chair press conference thereafter. Over to the US stock market. Yesterday, we continue to see very firm bullish tone in the major US stock indices with the acceptance of the Dow Jones Industrial Average because of the underperformance of a key US healthcare insurance stocks that has a higher weightage in the Dow Jones Industrial Average due to unfavorable US White House policy. And also yesterday's performance in the US stock market has been driven by US mega cap technology stocks, leading the Nasdaq 100 to be the top performer among the 4 major US stock indices yesterday, ahead of today's release of Microsoft and Meta platform earnings after the close of the US session. And lastly, the red hot precious metal, gold XAU/USD continues to surge within our expectation and hit a fresh all-time high in today's Asia session, clearing above the psychological $5,200 US dollar 5,200 per ounce as we are speaking right now. Good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. Today will be the Wednesday, the 28th of January 2026. So as usual, before we kickstart today's full suite of Daily Dose, let's have a quick look at the disclaimer. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and it's not investment advice. Past information is not representative of future results. Okay, so here we go. So before we jump straight into all the intraday technical outlook on the broad-based cross-asset classes, let's have a quick recap what has taken shape so far yesterday and as well as in today's early Asia session. Okay, so let me now share my screen. Okay, so let's start with the data releases first. All right, so yesterday we do have a key US data release, which is the Conference Board Consumer Confidence. Why consumer confidence is important? Because it's considered as a leading tier 1 data that represents consumer US consumer behavior that could have an impact on US retail sales and the services activity in the United States. Why? Because services industry or services activity contribute close to at least 3/4 of US GDP growth. So yesterday, Conference Board Consumer Confidence data came in way below expectation. Market is expecting 90.9, it came in at 84.5. And that being said, 84.5 is actually the lowest level since 2014, surpassing the pandemic depths as well over here. So very clearly, it's breaking down below the low that was seen during the March 2020 pandemic era. So what it means that US consumer confidence continues to deteriorate, which potentially could translate to further weakness in retail sales going forward, given the fact that consumer confidence is a leading economic data, which also translate meaning that the Fed, it's still on a path of an interest rate cut cycle rather to end it. The biggest clue will be when will be the next interest rate cut. All right, because right now the Fed funds futures market is still looking for the next cut to come in on the summer months over here. So based on the CME Fed Watch 2, before today's key risk event, which is a Fed Chair press conference, given the fact that market participants is not expecting the Fed to cut rates today, maintaining at 3.5% to 3.75%, and market is expecting it to stamp at until the 17th of June 2026 FOMC meeting, where market is assigning a high chance of 83% to do the potential fourth cut by the Fed to bring it down, to bring the Fed funds rate down to 3.25% to 3.5%. And market is expecting a kind of a slightly 55% chance that the Fed would do the fifth cut to bring it down lower to 3% to 3.25% on the Fed funds rate on the 16th of September 2026 meeting, and a higher chance at 75% on the 28th of October 2026 meeting. So net overall, market participants is expecting the Fed funds rate to end on the last day of the FOMC meeting, last day of the last meeting of 2026, which is on the 9th of December 2026. 95% chance the Fed funds rate to be at 3% to 3.25%, implying at least 2 interest rate cuts so far this year. That hasn't changed. So what will change is only the pricing, whether the current high pricing of 82% chance on 17th of June will be bring forward to either March or April. That's all dependent on how Fed Chair Powell will guide the market in his press conference thereafter. All right, so this is the situation right now, and because of the weakening of the conference board confidence data, and also together with Trump, kind of a he was being quoted in the media when yesterday one of the reporter asking about the situation of the US dollar. So bear in mind that the White House administration policy on the dollar is being governed by the US Treasury. So the US Treasury in the past has been keep saying or reiterating either directly or indirectly stating that they are still in favor of a strong dollar. But given the fact that after Trump himself mentioned that he's not concerned about the ongoing slump on the US dollar, that actually allows speculator to speculate that the overall policy, FX policy that is in the we call it in the minds of the US White House administration seems to be a weaker US dollar. So that's actually especially gelled in the greater arc of the White House grand policy of making America great again by having high-tech manufacturers to invest in their supply chain and their end product in American soil and allow American to become a key exporter of such product. So in order to get the grand scheme of things workings, the end impact is to have a weaker dollar. So that pretty much gel in line with the overall long-term strategy that the Trump administration is having right now. All right, so that causes the speculators to pile in to exacerbate the weakness in the US dollar that has taken shape since 15th of January this year. So bear in mind that still recall that whatever rebound that I share you guys on 24th of December all the way up to the start of this year, this is corrective rebound. We're in a major sideways range configuration, and yesterday it has a daily close below the major range support at 96.4, which represents that there's a high probability that the US dollar, based on the performance of the US dollar index, is at a transiting stage from a major sideways range configuration to a major downtrend phase. That means potentially last year sideways range configuration has already ended, and now we are transiting into a very similar decline that was seen previously from 14th of January all the way down to 1st of July 2025. So exactly a kind of a multi-month decline. And if we don't go back in time all the way down to, let's say I'll go to the 1 month, a monthly chart over here. All right, so what we are seeing right now, the US dollar is now breaking below a long-term circular ascending channel support that has been in place since 2011. So the US dollar index is breaking now a 14-year ascending channel support. So if we could have a weekly close by the end of this week, so given that this week we also have the Fed Chair press conference, which is a key risk event. So after this key event has ended, if by the end of this week, means by the end of this Friday US session, it continues to trade below 96.4, and as well as this turquoise green line here, which is the lower boundary of this long-term ascending channel support, which is a 14-year support, broken down below it, the odds will greatly increase of further US dollar weakness going forward from a multi-month perspective. Yes, on the intraday, we may see bounces here and there in the US dollar index, but from a longer term trajectory, we are now on the path of a weaker US dollar. And what does it imply for the cross asset classes? For sure, gold, silver, and other commodity asset classes will continue to see bullish momentum going forward, given that there has an indirect correlation with the US dollar index. A bit, we call it complicating for oil prices, given the fact that the current US White House administration wanted to have a much more abundance of oil supply in US and right now in Venezuela. So that could potentially put a cap in the rally in oil prices going forward, more of it being a range trading kind of scenario. And global equity space over here, with the US dollar weakening, we could potentially see more rotation into non-US stock market, allowing other markets to actually outperform the traditionally Nasdaq 100 heavy weighted tech driven markets that has been outperforming the rest of the world since the pandemic low of 2020. All right, so this is underneath, we see a potential rotation at play, but that will take shape from a multi-month perspective. All right, so that's the implication. So over to the state of the US stock market over here. So let me put the dollar index chart back to a daily time frame again. All right, so over to the state of the US stock market, we see three of the major US stock market outperform in the green, performed positively in the green yesterday. The SPX 500 is up 0.41%. The top performer is the Nasdaq 100, up 0.88%. A bit of front running ahead of today's key mega cap technology stocks earnings release, which is Microsoft and Metal Platforms. And the Russell 2000 also managed to inch out a gain of 0.3%. And the outlier is the Dow Jones Industrial Average, which is down negative 0.83%, but it's still holding above our key pivotal support level, around some access to it, which I highlighted yesterday. So why the Dow Jones Industrial Average underperformed with a negative loss of negative 0.83% yesterday is due to the fact of this a policy announcement by the US White House that actually rattled healthcare insurer stocks that sparked a sell-off of 100 billion market cap in healthcare insurer stock price yesterday. So it was actually due to the US government proposed holding payments to private Medicare plans next year instead of enacting the 6% increase where investors were anticipating. So that causes United Healthcare Group to plummet by 20% over here. So what you could see, if you look at the heat map of the S&P 500, there's this bunch of healthcare insurer company, which is a United Healthcare Group, tumbling down to almost negative 20%, precise negative 19.6%. And United Healthcare Group is one of the key component stock in the Dow Jones Industrial Average. I think it's ranked number 10 or 11 among the 30 component stocks. So that causes a negative impact on the Dow Jones Industrial Average, but not seen in the rest of the other three, we call it major US stock indices, given that the United Healthcare component has negligible weighting or doesn't even form part of the Nasdaq 100 over here. Okay, then that pretty much sum up the first segment of the daily dose for today. Okay, but before we jump onto the second segment, one particular data that is more pertaining to the Australia's economy will be the inflation rate out from Aussie land over here. So inflation rate based on a headline number, that means headline inflation, including those volatile items like energy and food. On a year-on-year basis for December, it actually rose more than expected, 3.8%. Markets expecting 3.6%, and way up, and also a 0.4 percentage point above November print of 3.4%. And if you strip out those volatile items, which is named as the RBA trim mean CPI, on the year-on-year for December, it came in within expectation, 3.3%, and slightly above the previous print of January. at 3.2% over here. So that overall increased the possibility that the RBA interest rate cut cycle has really ended, and there could be a risk that RBA may introduce one interest rate hike this year to actually justify it. Why? Because inflation levels continues to be stably above RBA's target, and that actually causes the Aussie dollar to remain in a very firm footing, hitting the 70 cents US per Aussie. Again, hitting the Aussie dollar hitting up the psychological 0.70 level, or 70 per 70 cents against the dollar, and that also came in within our expectation as well. So later I'll touch on what are the key intraday levels to look out for the Aussie dollar, since we are covering the full suite today of the daily dose. So let me now touch you through the intraday technical outlook, which is the second segment of the daily dose. All right, so let me expand my screen over here. Okay, so very quickly, let's start with the FX market. Okay, so let's start with the euro dollar. So the euro dollar rallied as expected on Monday over here, hitting the 2050 level, and right now is actually looking signs of a firmer accelerating uptrend phase that is taking place right now after the price action yesterday broken above the upper boundary of this minor ascending channel, which I drew from the low of 19th of January. So overall, the hourly RSI is still bullish, showing no signs of a bearish divergence over here. So there could be some form of a minor pullback taking shape today over here. So the minor pullback, taking into account of this ongoing bullish impulsive up move after that pullback, that first minor pullback has taken shape from 20th of January to the low of 22nd of January. I pull it up, do a Fibonacci retracement. That's around 23%, and the 38.2% Fibonacci retracement, confluencing at this graphical near-term support level at 119.55, which is the pullback line of this former minor ascending channel resistance, now turns into a pullback support. Graphically, this seems to be a much more important level, given that it tested 1 time, 2 times, 3 times before the current bullish acceleration move took shape on the intraday basis on yesterday at the 4 p.m. Singapore time. Okay, so as we are speaking right now, 11:22 a.m. Singapore time, there is signs of a pullback taking shape already over here, given that it hit an intraday high to of the US session at around 120.83, now shaping a pullback. So ahead of this key risk event today, which is the Fed Chair press conference, and as well as the monetary policy, which I do not see any signs of it changing the Dow. That means very likely it will maintain stampede. Most important is how Fed Chair Powell speak during the press conference. So that could potentially induce some form of minor pullback to come into play. So as long as this minor pullback didn't surpass today's tighten short-term pivotal support level, that means there could be a dip first before rallying back on the euro dollar, pardon me. So minor pullback maximum allowable tolerance for today will be at the short-term pivotal support zone, a tighten one at 119.10, 118.90, before another up leg takes shape to test the next intermediate resistance level at 121.30, pardon me. I repeat again, 121.30, 121.70. Above it, potentially seek out 122.60. So this is a bunch of Fibonacci extension cluster levels. And if you go to the daily time frame chart over here, this 121.30 is in fact the congestion area, right, that is being formed on 3rd of June 2021 and 14th of June 2021, and the higher level 122.60 confluence with the medium-term swing high of 24th of May 2021 and 1st of June 2021. So that is close to about what, 5-year plus high over here. Okay, so back to the hourly time frame chart. So if we didn't manage to see a pause at the 180.90 level and it has a daily hourly close below it, then potentially this will kickstart a much more steepened minor corrective decline sequence, exposing the next near-term support area at 118.33, followed by 118 figure, 117.90, which is the lower boundary of this minor ascending channel. So one price action hit around this 118.33, 18 figure, 170.90 level. I'll be still on the lookout on the bullish reversal candlestick to flip my buyers back to the bull side of the story again. Why? Because overall, the US dollar index continues to trade in a rather weaker footing, which I explained to you at the first segment of daily lows, breaking below a 14-year support level. And given that the euro is the highest weightage currency in the US dollar index, and also the euro dollar itself is still holding above the 20 50-day moving average, and the 20 and the 50-day moving average is now above the 200-day moving average, indicating that the short and medium term uptrend phase of the euro dollar still remains on the bullish side of the story. All right, so that explains my justification. So that's for the euro dollar. Next up, very quickly, will be the sterling dollar, where the pound is versus the USD. So the pound also continues to rally above our expectation, where yesterday we have a very tight short-term pivotal support level, hit our resistance level, and right now it's also showing signs of a minor pullback taking shape during the Asia session. So first pullback support level to watch will be 137.50. Maximum allowable will be this congestion area here that's being formed on Monday and hit intraday low at 4 p.m. yesterday. Before staging a very steep rally on the US throughout the US session yesterday. So using 137.15, 136.80 tighten short-term pivotal support level to maintain my bullish bias in any dips on the sterling dollar, with the pound against the USD, for the next resistance to come in at 139.10, 139.38, followed by 139.75 on the very short-term intraday/intraday basis, which is a Fibo extension cluster level. And as well as you go to the daily time frame chart, these two levels here coincide with the 9th of September 2021 swing high area, and as well as the congestion area of 23rd of June 2021 and 5th of August 2021. So that is close to around a 4-year plus high, all right, over here. Now back to the daily time frame chart again, back to the hourly time frame chart again. So if price action can't maintain above 136.80 and have an hourly close below it, then potentially we may see a deeper minor corrective pullback unfolding, heading back towards the pullback of this former medium-term ascending channel support. Now there's a pullback resistance at former minor ascending channel resistance now turns to a pullback support, pardon me about tongue twisting, at 135.88, 135.68. And if you do the Fibo retracement of this ongoing impulsive upmove sequence from the low of 22nd of January, where it tested the 200-day moving average, to yesterday's US session high, that confluence also with the golden ratio of 61.8%. So if price action level hit this level over here, I'll be on the lookout for a bullish reversal candlestick at around the 135.88, 135.68 level, because the short and medium term uptrend phase of the sterling pound still remains bullish constructively, given price action continues to trade above the 20 and the 50-day moving average. Next up will be the Aussie dollar over here. So the Aussie dollar rallied and hit our resistance level at 710, 730 over here. And right now, potentially there could be some signs of a minor pullback. So I will tighten my pivotal support level to 68.96. Pullback support level, in first step to watch, on the first support level to watch will be yesterday's Monday's US session high. Now terms the pullback support at 69.40. Pivotal support level for today will be tightened all the way up to yesterday's European session low, or yesterday early European session low at 68.96. So as long as 68.96 pivotal support holds, short-term pivotal support holds on the Aussie dollar, maintain a bullish bias after this minor pullback that may take shape. Above 70.30 potentially take us up higher towards the next resistance level at 70.65, 70.70, which is a Fibo extension level, maximum 71.40 in the days ahead. All right, over here. So what's this level over here? Fibo extension on the shorter time scale, and if you go to the daily time frame over here, 70.65, also confluence with the congestion area of 1st of February, and the 71.60 confluence with the medium term swing high area of 2nd of February 2023. All right, only a bearish breakdown and the hourly close below 68.96 will invalidate today's bullish bias view to see a much more deeper minor corrective move unfolding to expose the next near-term support level at 68.35, followed by 68 figure level, maximum 67.60 over here, which confluence with the rising 20-day moving average. So that's for the Aussie dollar. Next up will be the dollar yen. So dollar yen managed to stage that bounce and plummet below and now coming very close to a support level at 51.90, 51.60, which is a 0.368 Fibo extension level as well. So this could be viewed as a minor impulsive wave 3 on the downside. Let me put it in text. Okay, so this could be the minor wave 1 over here. Let me put it black color, wave 1, wave 2, and the last and the past what you call it, Friday, Monday, Tuesday, 3 days of 3 trading days of impulsive decline could be the end of that wave 3 over here, coming very close to the 3.618. And if you were to do a Fibo extension to find a fifth wave target of this wave 3, the micro fifth wave target is wave 3, talking about the 1, 2, 3, 4, 5 of a tree. If you do that Fibo extension, that also constitute very closely to the 0.618 as well over here. So given the fact that it's now approaching this wave 3 downside move, and also confluence with a pivotal support zone 51.90, 51.60. How do I know that? If we go to the daily time frame chart over here, this 51.90 confluence with this area here, the congestion area of 22nd of October last year and 28th of October. All right, and also coming very close, hit this dotted gray line here as well, which is a key graphical pullback support of that former major long-term circular descending trend line resistance that was taken out earlier of 11 November last year, now turns into a major pullback support level, confluencing at the 51.90 area. All right, so now back to the hourly time chart over here. So that being said, over here, I will use 51.90, 51.60 as my short-term pivotal support level. And what we could see is that the hourly RSI starts to trace out a bullish divergence as well, indicating that this could be the potential end of that impulsive micro wave 3. And we could now do a dead cat bounce for a micro wave 4 to take shape over here before the wave 5 to bring it down lower, breaking below 51.60 thereafter. But that could take place maybe only towards the end of the US session today, given the trajectory that we are seeing right now. So if you do that Fibo retracement of that wave 4, it tends to be at 38% Fibo retracement of the length of that micro impulsive wave 3. So if you look at the 38% Fibo retracement, it also coincides with the medium minor swing high that is being shown on yesterday, Tuesday at 4 p.m. Singapore time. That will be at the 154.73. And the 50% Fibo retracement will be the gap down that was seen on Monday. So i.e., what we can do over here is that we will flip to a intraday bullish bias for today. But bear in mind that this is only a counter trend rebound. After this counter trend rebound, that could be the wave 5 taking shape to push it much lower towards the next support at 150.50, followed by 149.80/60, which confluence with the 200-day moving average. So two key resistance level to watch on an intraday basis for today: 153.70, 153.40, followed by 154.73 over here. All right, which is a 38.2% Fibo retracement. Maximum 155.35, 155.60, which is the gap down of this Monday, and the 50% Fibo retracement of the length of that wave 3, which I drawn earlier on. So once price level hit at 154.73, very close to it, I'll be on the lookout for any signs of a bullish exhaustion candlestick on the lower time frame, be it the 50-minute time frame, which we also can be applicable. Then I will flip my bias back to the bear side of the story again, given that the bigger picture of the dollar yen is still skewed towards the bearish side of the story. However, if price action didn't go up as intended towards 153.70, towards 153.70, towards 153, sorry, it should be 153.40, 153.70. Okay, let me put it in a proper sequence. Okay, if price action didn't go up as intended towards 153.40, 153.70, and from here it tumbled down and break below 151.60, then we will invalidate today's bullish bias review on that dead cat / minor corrective rebound sequence and see the continuation of this bearish impulsive up move, bearish impulsive down move, pardon me, to see the continuation of this bearish impulsive down move to expose the next two support level at 150.50, followed by 149.80, 149.60, which is the 200-day moving average. All right, so that's for the dollar yen, and also sum up all the intraday technical outlook on the four major US dollar pair. So now let us now proceed with the major stock indices, pardon me, but tongue twisting, starting with the Hong Kong 33 that is representing the Hang Seng Index. So very strong push up on the Hong Kong 33 right now, also breaking above the major range resistance. Okay, why this major range resistance is very important? 27,500. This is on the intraday basis. So if we could have a weekly close, all right, because I'm drawing it from the weekly time frame chart over here. Now is breaking above this 27,500, which came in within our expectation as well. So this level is very, very important. Why? Because it was solidified our view that the Hong Kong 33, i.e. the Hang Seng Index, is now transiting into a major multi-month uptrend phase by breaking above 27,500 and have a weekly close above it. That means, i.e., closing above this long-term circular descending trend line that kept previous multi-month / multi-week rebound in place since the current all-time high that was printed way back on 29th of January 2018 at 33,495. And so that also boils in line with the earlier longer term global market rotation that I mentioned in early today's at the start of the day, where we start to see the significant breakdown of the US dollar index, transiting that the previous long-term circular outperformance of the US stock market is potentially over, and now money's global fund managers and those sovereign wealth funds could actually shift more allocation away from this underrepresented weighting in their global portfolios, which is non-US stock market, which the Hong Kong 33 part of Asia could benefit significantly from it. All right, over here. So with that, now let me do some adjustment to the price level. Okay, over here. Okay. Okay, so the next resistance level to watch after 27,740, that is also hitting it right now, will be 28,177, followed by 28. Oops, sorry. 438. Okay, 28,438. Okay, let me put it in writing. Okay, sorry about that. What's going on? 28,177. Okay, 28,177. 28,438. 28,438. Okay. Then let's do a interior Fibo extension, because this Fibo extension I take into account of the previous impulsive up move from 16th of December, push it up to 6th of Jan, then project it down from the end of this minor corrective decline on 8th of January. So we know that now it starts to hit this new impulsive up move from 20th of Jan low. So we do a interior Fibo extension cluster level to see it whether it confluences with any boundary as well. Okay, it seems to us that this level here, 1.618, confluence between 28,166 and 28,434, and above 28,434 potentially see a higher one at 28,796, which confluence with the 1.618 from the previous impulsive move, which is 28,860. But that one should be in the multi-days ahead. So on the intraday basis, this should be the sufficient resistance level to watch. All right, so given that this has already been taken out, so this will be a pullback support level, the 27,500, and my pivotal support will be shifted up to this minor range resistance that was 13th of January to 16th of January, now turns into a pullback support level. Okay, let me tidy up everything. Okay, so this is no longer a pivotal support. Given the current strong impulsive up move on the Hong Kong 33, representing the Hang Seng Index. Delete. All right, good. Everything is tidy up. Okay, so now, given the fact that it has already broken above the 27,500 intraday basis, and right now, first pullback support level to watch will be 27,500 intermediate support. Key short-term pivotal support for today, a tighter one to 27,175 to maintain this ongoing bullish impulsive upmove sequence, with the next two resistance coming in after 27,740 will be at 28,177 followed by 28,438. So given that the RSI is at a kind of a extreme overbought level, so hitting previously the high that was seen on 13th of January at this 85 level, where previously it has a consolidation. So there could be some form of a minor pullback taking shape right now, given that it's already hit the first resistance level at 27,740 after 27,500. So first pullback 27,500. If 27,500 gives way, potentially it may dip slightly lower, as long as 27,175 short-term pivotal support holds, a tighter one for today. After this minor pullback has ended, potentially we may see further upside, potentially to test out the next resistance level at 28,177, 28,438. Only a bearish breakdown below 27,175 will invalidate today's bullish bias view to see a much more extensive minor corrective decline sequence take shape, to expose the next two near-term support level at 26,922, maximum 26,637. If price action float down to around this 26,922, 26,637, I'll be still on the lookout for a bullish reversal candlestick and flip my bias back to the bulls again once price action hit this lower level, given the fact that the Hong Kong 33 is in transition towards a medium-term / major uptrend phases, and price action continues to hold above this rising 20-day moving average, and is about to turn up 50-day moving average as well. So that's for the Hong Kong 33. Next up will be the Japan 225. So the Japan 225 continues to trade above the 20-day moving average, but still can't surpass above the second resistance level that we highlighted, 53,570. So that being said, I do not want to tighten my pivotal support to be so tight to up towards the 20-day moving average. Now confluencing with yesterday's US session low, which is at 52,675. So unless price action is able to close above the hourly close and a breakout above 53,570, then I would tighten my pivotal support to 52,675. So for now, pivotal support remains the same at 52,060, 51,837. Looking for this ongoing bullish recovery of the Japan 225, represented in Nikkei 225, after that earlier slide from the 22nd of January high towards the this Monday low, due to the fear of this snap Japanese election, and also surrounding the recent brief spike up in the JGB yield as well, long-term JGB yield. So above 53,570 potentially take us up to retest the current all-time high at 54,565 area. Only a bearish breakdown below 51,837 will invalidate today's bullish recovery scenario on the Japan 225 to see another round of choppy minor corrective decline sequence extending further towards the downside, exposing the next near-term support level at 51,165, with confluence with the 8th of January 2026 swing low area and also the 50-day moving average. So that's for the Japan 225. Next will be the Germany 30, representing the German DAX over here. So German 30, German DAX going to trade in a sideways range, still can't break out above the 25,080 level over here. And given the fact that yesterday you also can't cleared above the 20-day moving average, and this 25,080 level kind of confluence with the former medium-term ascending support now turns into a critical pullback resistance as well. So given that it can't clear above, okay, so let me put up this one, okay, it can't clear above this 25,081 yet. So I do not want to be so aggressive and tighten the pivotal support level from my first support level at 24,750 over here. So 24,750 also confluence with this week low, which is this Monday Asia session low as well. So pivotal support area still remains the same at 24,480, 24,375 area here. So unless we have a clearance and hourly close above 25,081, that I will tighten my pivotal support to 24,750. So still maintain that bullish bias, but kind of a bullish consolidation phase for the moment for the Germany 30, unless it has a clearance above 25,081, then this bullish consolidation will potentially transit to an impulsive upward sequence. Looking up for the next resistance to come in will be at 25,260, followed by the current all-time high area at 25,505. However, a bearish breakdown below 24,375 will invalidate this bullish bias to see it further sliding downwards to test 24,250. Failure to hold above 24,250 will see further weakness towards the key 200-day moving average, confluencing at the 18th of December minor swing low at 23,885. So that's for the Germany 30. Okay. Next up will be the major US stock indexes, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the US Wall Street 30 did a whipsaw around our pivotal support level at 49,030, now trading back up slightly above it, with a slight dip to yesterday to 48,918 over here due to that sell-off in that United Healthcare stock, which has a significant weightage on the Dow Jones Industrial Average. So given the fact that it hasn't really properly broken below the pivotal support level, so I will have a bit of excess, I will tolerate excess to 48,918, slash it 49,030 slash 48,918, but I will have an upside trigger level for today at 49,263, which was yesterday's Asia session low, broken down, now turns into a pullback resistance. Right, 49,263. Right, so that will be my upside trigger level. A clearance above this upside trigger level potentially seek out further potential push up to retest the current all-time high area at 49,606 on the US Wall Street 30. Only a bearish breakdown and an hourly close below 48,918 will see further weakness and allow the US Wall Street 30 to drift down back towards the support area of 21st of January. So that was during the scare of that tension between US and its long-term airlines, which is the NATO members, over the control of Greenland. So the next support level to watch with 48,770, 48,650, maximum 48,480, 48,340, which confluence with this rising 50-day moving average as well. So that's for the US Wall Street 30. Next will be the S&P 500. So the S&P 500 now has been evolving into a minor ascending channel from the low of 21st of January, and as it's broke up above this former minor swing high of last Friday, 23rd of January. So with that, I would tighten my pivotal support level. So right now it's actually testing the current all-time high, 7,005. So first level to watch for any chance of a pullback to take shape will be yesterday's US session low, which is at 6,977. We also congested previously of the former swing high area of this Monday US session as well, not to a pullback support yesterday at 6,972. So 6,972, first support level to watch for this minor pullback. Maximum tolerable will be at 6,945. So I will tighten my pivotal support level to 6,945 today, maintain the bullish bias in any form of any minor pullback that may take shape later. Above 7,005, potentially take us up higher towards 7,380, 7,045, which is a bunch of Fibo extension cluster level, and also now confluence with the upper limit of this ongoing minor ascending channel drawn from the low of 21st of January. Only a bearish breakdown below 6,945 will see a retest at the 20-day moving average, acting as the next near-term support level at 6,923. We also confluence with the lower limit of this minor ascending channel. Only a bearish breakdown and an hourly close below 6,923 will unleash a much more deepened minor corrective pullback to expose the next near-term support level at 6,877, 6,860, which confluence with the rising 50-day moving average as well. Lastly will be the Nasdaq 100. So Nasdaq 100 finally broke out above our very steep resistance level that we mentioned earlier on, and we mentioned yesterday. Nasdaq 100 was one of my chart of the day because of the pre-breakout that's being seen on the daily RSI, which I highlighted yesterday. So this steep resistance was previously in place since 8th of December. So finally it broke out. Once this resistance broke out, a slew of bullish momentum came in and maintained it throughout the US session yesterday, hitting our next resistance level that we mentioned earlier at 26,107, exactly before pausing in today's Asia session. So given that the RSI really hit the overbought level, but no bearish divergence yet, so there could be some form of a minor pullback taking shape rather than a deepened minor pullback. So minor pullback support level to watch for today in first step will be this area here. Okay, 25,954. Maximum will be that former stiff resistance range resistance now turned into a critical pullback support level at 25,830, 25,760. So as long as this pullback didn't surpass below 25,760, thereafter the bullish bias move could continue on the Nasdaq 100 after this minor pullback takes shape. So still maintain that bullish outlook on an intraday basis after a pullback on the Nasdaq 100, with the next resistance coming in at 26,290, which is the current all-time high area, which is very close to the 1.236 Fibo extension of this ongoing bullish impulsive upmove sequence from the low of 21st of January, and also the upper limit of this minor ascending channel as well. Above the current all-time high at 26,290 will potentially take us up higher to a next Fibo extension cluster level at 26,430, 26,450. Only a bearish breakdown below 25,760 and hourly close below it will invalidate today's bullish bias move to see a deepened minor corrective pullback sequence unfolding towards 25,625, 25,508, which is the 20-day moving average. So that's for the Nasdaq 100, and also sum up all the intraday technical outlook on the global stock market. So let us now turn our attention to the commodities asset class, starting with Gold XAU/USD. So Gold XAU/USD going to pierce higher and now hitting our resistance level at 52,000, 5,000, 52.27, 52.42. All right, over here. So given that it already cleared above this level, so now this will be a pullback support level to watch over here. And now my pivotal support level will be tightened to yesterday's minor range resistance that was taken shape previously during the start of the European session and broken out during the end of yesterday's US session over here. All right, at 4 a.m. Singapore time today. So this will be my range resistance, now turns into a critical pullback support, which is my pivotal support for today. Okay, let me do some adjustment. All right, so that is 5,094. ST pivot support. Okay, so this will be my next resistance level. No longer a pivotal support level. Oops, I didn't see it correctly. Okay, let me, yeah, this is the one. Okay, yeah, need to do some adjustment. Alrighty. Okay, so everything is adjusted now. Okay, so given this very strong impulsive upmove sequence, it bears to be more prudent, and also the RSI still continues to be in a bullish dynamic. Haven't hit yesterday's overbought level yet. All right, continues to shape a higher low after the bounce from this parallel ascending trendline support level. So bullish momentum still remains intact. So any form of a minor pullback that is taking shape over here. So two levels to watch on the minor pullback. Firstly will be the 5,149 level Maximum allowable will be the Titan pivotal support level at 5,094. So as long as 5,094 holds Titan short-term pivotal support, I will still have a direct bullish bias view on Gold XAU/USD. Next resistance zone to watch will be 5,325, 5,384, followed by 5,459/5,483 Fibo extension cluster level. Only a bearish breakdown below 5,094 will invalidate today's direct bullish push out and see a deeper minor corrective pullback to retest 5,000 level. Only a breakdown below 5,000 level will unleash a much more forceful pullback towards 4,888 over here. So as long as price action still continues to maintain around 4,888, I will be on the lookout for a bullish reversal candlestick next, keeping my bias towards the bulls, given that the longer term trend still remains intact. The longer term uptrend remains intact. The medium term uptrend still remains intact, given that the price action still continues to trade above the 20 and the 50-day moving average. So that's for Gold XAU/USD. Revised key levels to look out for as I maintain this ongoing bullish trend, bullish bias on the intraday basis, and with the possibility of a minor pullback taking shape first before continuing its bullish momentum again. So that's for Gold XAU/USD. Okay, next up will be the West Texas crude oil over here. So the West Texas crude oil broke above our short-term pivotal resistance level and going to inch higher. The hourly RSI is not showing any signs of a bullish divergence, continues to shape a higher high over here. So perhaps right now we may see a continuation of that churning upwards of the WTI crude oil price. Right, there's no, give me a minute, what I'm doing. Yeah, there's no bearish divergence over here. So given the fact that there could be a chance right now is start to involve a bullish ascending channel, a minor one, since the low of 8th of January over here. So with such ongoing bullish momentum that still remains intact in the short term for West Texas oil, I will flip my bias into the bullish side right now, at least in the very short term basis, with the pullback support area here now turns into a critical short term pivotal support area at 6135/6117. All right, 6135/17. All right, so using a pivotal support zone at 61.35, 61.17, I will maintain a bullish, I will flip to a bullish bias on the intraday basis on West Texas oil above 63 figure level, which is also very clearly above the 200-day moving average. We'll see a further squeeze up towards 63.73, followed by 64.50, which is the congestion area here of 19th of September and 23rd of September. Only a bearish breakdown below 61.17 will invalidate today's bullish bias view to see it floating downwards again to retest 60.10, which is the minor ascending channel support. A breakdown below 60.10 will see another round of choppy downward drift to retest the next near-term support level at 58.76, which is the 50-day moving average as well. All right, so that's for the West Texas oil, and that's also sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today, other than the FOMC meeting thereafter? So at the start of today's European session at 3 p.m. Singapore time, we have Germany GfK consumer confidence data. So market participants expecting a slight improvement to negative 25.8 for the month of February from January print of negative 26.9. So that could potentially influence the euro dollar, the euro crosses, and in some form the Germany 30 CFD index. And at 6 p.m. we have a ECB official speaking, ECB Anderson. And also for those who have an interest in the Canada dollar, we have Bank of Canada interest rate decision at 10:45 p.m. Singapore time. Market participants expect no change to the policy rate maintained at 2.25%. And thereafter, we have, pardon me, sorry about that, we have the press conference coming in at 11:30 p.m. Singapore time. So that's the Bank of Canada. So that could potentially influence the dollar CAD and the CAD crosses. Then we have the EIA crude oil stockpile change at 11:30 p.m. Singapore time. So that could potentially has a short-term impact on the West Texas crude oil. and followed by the key event for today will be at the 3 a.m. Singapore time, Thursday, 29th of January, FOMC meeting. Markets participate expecting no change. So the focus will be on the Fed Chair press conference on what is the latest monetary policy stance undertaken by the Fed and the thinking among the FOMC members. So that could potentially come out at 3:30 a.m. Singapore time, and that could potentially last to about 1 hour until 4:30 a.m. towards the close of the US session. So that's the start of the Fed Chair press conference, 3:30 a.m. Singapore time over here. And that's pretty much sum it. And also do not forget over here is that after the close of the US session today, Wednesday, like I mentioned, we have 3 mega cap stocks, 2 from the technology side. 1 will be Tesla, consumer discretionary sector. Microsoft, Meta, and Tesla will all report their earnings, Q4 earnings result, right after the closure of the US stock market. So right after 5 a.m. Singapore time today. So something to look out for as well. So that sum up today's Daily Dose of Market Insights. Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.